the SP 500 and the Nasdaq 100. We're going to talk about exactly where we are and where we've been going. We need to talk about specifically these major key levels you've been testing and some of the big factors coming from the Fed members and what they said today regarding the pivot, because there was direct answers from the head honchos of the Fed today. We need to get right into that. So let's not even waste time. Let's jump right into the news. First out of the gate, I'm going to go to my Twitter in a second to highlight some of the bullet points I covered this morning. But the Fed Bullard says rate hikes have had only limited effects on inflation so far. Okay. Highlighting this also, if you really get down to this, I'll have this link down below so you can watch it or read this if you want. But going in here, he expects disinflation to start happening into 2023. He also doesn't really expect to start cutting rates until 2024. That's where we're going to start here. Now, I want to just go over the specific big notes here. We have four major statements. Number one, we had some jobs and we had some data released today. But Fed Bullard said something that was major and pretty concerning. Fed Bullard cites the policy rule suggesting rates between 5 and 7%. That is a lot broader than we assumed. Okay, so if you look at most of these rate hikes and where they're going, the statement has been basically like 5.5% being on the high end. And that's what Goldman Sachs has released. I think 5.25 to 5.55%. Well, Bullard's saying, look, there's nothing off the table. This could go all the way up to 7% when we come to raising rates. Right now, I believe we're at 4.25, I believe right now. I could be wrong, but we're very close to peaking out here, right? That's very important to realize. And we're expecting a 50 point going into December now, and then a 25 after that. But this doesn't really add up, because if 7% is the ceiling, we could be doing 25% for a long, long time. Very concerning. Now, when it gets to data, this was released today. We talked about data, jobs report being one of the biggest, right? Looking at job claims, you want this number to go up. Hypothetically, we want unemployment to go up. We want the claims on getting new jobs. We want that to start rising, right? We want people to be out of jobs. I know it sounds bad, sounds heartless, whatever it may sound like, but this is just the fact of the matter, okay? You need unemployment to rise for inflation to start going down. Job numbers did not reflect this. That was not good to start off. Number two, Philadelphia Fed manufacturing, probably and arguably one of the biggest manufacturing data points out there, came out terrible. A very bad miss. Really bad. Indicating going back to the supply and demand issue, which the Fed can impact. But if you look at how the Fed can impact them, and Kashikari spoke on it today, Fed Bullard as well, they can impact it, but what they do is they can raise rates to make it hurt more for these companies and for the consumer, so demand has to drop. So that's how you fix this issue, is you basically make things more expensive, the cost of living higher, specifically with raising these rates, and then it becomes harder for consumers to live, which sounds like a terrible process, but it is what it is, okay? I'm not sugarcoating anything. This is just what you have to expect and look forward to. Now tomorrow, so as far as data goes, nothing too major, if you will. You have home sales, and I want to highlight, you saw some home sales data coming out today as far as applications and mortgage rates. Those did rise a little bit. It's still net down. I want to highlight that. But you also saw mortgage rates drop drastically over the past, week and a half, roughly. Almost from, I think, 7.7% down to 6.6%. One of your biggest drops in almost 30 years, okay? Big factors to be looking at here. So as far as news, this is the biggest things going on here. Before we go any further, I have to ask you to consider doing two things: liking and subscribing. Every single day I'm going over, everything regards to the market. I'm breaking down it unbiased. I'm giving you the good, the bad, the ugly, my wins, my losses, etc. Now, yesterday I did tell you here on the channel, the only play that I had was a Meta put. I had a put on Meta, Facebook. Coming out of the gates, we had puts on this about 185, 190. Those opened up around 250 each. I closed those out. In comparison, I showed you my loss yesterday on Twitter. Today's winner was 1100. Almost double that, right? It's all about risk or reward. I had a loss of about $300 on Microsoft also. Was a tight stop. I went into that also. We actually covered that on the live stream, but I wanted to cover that so everyone can know. I like to just be transparent to show you the winners and the losers. And the point behind that is to show you risk to reward, people. risk to reward. Because if you understand that, it will change the way you trade. And I try to give you an example of that with how we look at the market. Now, let's look at the stocks. Let's look at the indexes specifically. I'm going to highlight what we're looking at. 3962. That is the line in the sand on S&P futures. Looking at NQ, same thing. You have about the same area, about 11.8. Okay, let's break this down. Where are we at? How are we moving? First, we'll start with NQ. I believe ES and SPY give you more answers, but I do want to highlight you are in a downtrend, as you can see. You can just quickly visualize this going on here. Again, you can actually bring it. Let's bring it right here. Just give you a better look. So line up perfectly right there. You can see we are still in this downtrend, kind of get rejected at this right here in the after hours, the 4-hour chart. So you can see going into ES, what's happening here. Same type of downtrend. Very important to realize where you're at and how you're moving here. Okay, you can clearly see the downtrend we are still focused on, right? Now, when we get here, you can see where we dropped down hard, came up, and we're rejecting so far. This is bearish in my opinion. It's a break and retest so far on a large time frame like the 4-hour. This doesn't look good in my opinion. Okay, so I want to highlight that. We came up to our 430 level and we haven't even tested the 4100. And with this downtrend, I anticipate, not good behavior. Now, specifically when we talk about this, the most relative area to look at is the SPY. It's just the easiest, gives you the most visuals. It's, in my opinion, just where we should be spending most of our time. And if I come to about the 1 hour, I want to highlight where exactly we are. Okay, so if you've been following on Twitter, you've been following the channel, 395 is the level, right? You can highlight this 395 level. You can zoom out if you want. You can come all the way back and highlight where this, line in the sand has came from. You can see we were rejecting back here, and now we're rejecting there right now. So if we look, we can see we were bouncing on the past basically 2-3 days, and now we have lost this level, getting a perfect retest 1, 2, and almost 3 times happening right now in the after hours. Okay. Now, I'm not saying you're dumping, and right now I'm liquid. I have no positions, essentially, just sitting on my hands right now. I do expect downside from this level. I told you on Twitter, I told you on the videos, if you break 395, 390 is going to come quick. That's where you opened up on the market today from there. You're pushing up, you got rejected, pushing back up right now, trying to at least. On the after hours, also, ES is getting hit right now. So these are things to be looking at on the market from a broad sense, give or take. Now, when we go look at more of this data, you can get more answers when we look at something like Flow Algo. Again, not sponsored by these guys. This is a tool that I'm using. When you go and look at liquidity, like I've been saying, that's where all your liquidity is, right there, 395. And they're showing up time and time and time again. You're even getting liquidity around this area now, 394, 394.6. You're seeing it happening more and more and more. So I want to pull up SPY. Look what's happening. You're seeing sell orders now happen today. You're seeing these orders come in. What's happening? You're seeing the script flip. So now you're seeing sellers dominating here, holding you below this level. This is the line. This is the ultimate line in the sand. If you traded this today, it was one of the easiest trades possible. Literally one of the easiest trades. All you did was wait to come up to this area. You test it, and boom, you were rejected. I was literally going over this live on YouTube for you also. So make sure you have those notifications turned on so you can catch those live streams. But looking here, it was really clear. Rejected, pushed back up, but that's where we're at right now. Now, as we look further, this is just all I'm looking for right here, specifically. Looking at Qs, giving you a better example here. Again, I had like about the 285, 286 level, a little bit more important. But I want to say the Qs are a little bit less connected, right? Less important levels, in my opinion, less liquidity there. SPY 395 is that level. It is that guy. It's the most important. That's where I'm spending most of my time here. Now, I do want to go over DXY and some of the more fundamental areas. Now, when we look at the DXY, the dollar, what's happening here, if you don't know, it's been a pretty good indicator, and people have been asking me about it. Use the DXY as almost an inverse to the market. If DXY drops, the market usually goes up. Risk on, risk off. Now, we have a lot of levels here, but I want to highlight something. This is your 200 moving average on the daily. You have been above this since June 21st, 2021. Okay, it's a long time. It's a long time. You've been trending above this. The last time you broke below this, for instance, it was disgusting. You went from 98 on the DXY all the way down to 90. It was tough. Even when you flash broke it, it was a really bad drop. So I want to highlight the importance of this level going forward. Testing this area, I do believe we could bounce, okay? but I don't think you're going to get a clear break of this area until after the Fed meeting in December. The biggest thing going into that Fed meeting, so you know right now, is going to be PCE inflation. That's the number one thing going for it. In the next few days and weeks, look out for PCE. I believe it's next week. That's the most important. PCE will dictate how the Fed treats the next meeting, whether they cut, they turn more to the sense of a pivot, and that's going to be the biggest factor there because they're going to start finally seeing if inflation is being handled. We've seen CPI and PPI come down, but we saw manufacturing really get hit, and we haven't seen the effect on jobs, and jobs is what we need to see. So that's going to be the big factor here. And if we start to see that quote unquote pivot, it's possible we'll see the dollar drop, and we'll start to see a big drop across the dollar for maybe, the next few weeks, maybe even months. So those are things to consider. The biggest thing when it comes to the dollar, though, is that and people keep asking me why I don't talk about it as much, is because you broke your previous highs here in July 2022, and then this big level in August, right? It was a huge level. We broke, and then we held for a while. So I want to highlight the importance of where we're at right now, okay? If we can get back above this, I'd be very bearish on the market in general. But again, we're at a very interesting time. I'm less concerned with how the DXY is moving until you get back above this level or you break below the 200. You're kind of just range bound here. We've even seen from the volatility here, we haven't had great movement on the market, okay? It hasn't been as influential. Back up here, very influential. Down here, less so. Now, going into VIX, people ask me about this. You're still at the 23, 24 region. This is a very volatile region. We've seen a lot of big bounces, big corrections start from this point. So I do want to highlight that. Very important to look forward to. Again, PCE going into the Fed meeting will be the most important aspect of how the VIX moves. If PCE comes out good, the Fed meeting goes well, VIX is going to drop probably down to $19, maybe even lower. I'm just going to tell you right now. That's the biggest factors on the market. We haven't seen a lot of volume over the past few days, but this is what you need to be watching. Last, I'm going to be looking at the yields, the 10-year. Again, 10-year, you're still below 4%, which does not necessarily mean that you look great, but it's worth mentioning over 4% is terrible for the market. Going into the 30-year, looking here, you're below 4% also. I will highlight, I talked about this on the live also. You are still very close to inversion and holding your higher lows that you have been making for basically the past almost 2 years. Highlighting that 2 years, higher lows on the yield inversion. Okay, so you are not out of the woods yet. This could easily break back up. You need to be watching out. And again, it's really coming to a very timed moment with PCE and what's happening with the Fed meeting coming in December before the holidays, the last rate hike. Okay, those are things you got to be looking forward to. That's what I'm looking at specifically here on the broad scale market. Make sure this is really cleaned, really clear. There's nothing hidden here. What you got to be watching for. I will mention TLT. It's a pretty good indicator of the overall strength of the market. Looking at TLT on the day and essentially the past few days, you've been going straight up. So I still believe the market's in a decent position. If TLT can get back above this big area that we had marked out previously, 104 level, I do believe there's upside potential on the market, and you're seeing more health overall, and you're still seeing higher lows being established since that low we made in October. I want to make sure that's known, make sure it's clear. This is what I'm looking at. These are the biggest factors on the broad scale market right now. Extremely clear. There's nothing else to look at here. I want to make sure that's very much known. Again, when we're looking at the market specifically from a day trading aspect, if you're below 395, I expect downside. If you get back above 395, I expect upside, and the target would have to be towards 410, which we have not tested that supply yet. Again, when we're looking at supply levels, it's really clear here. Your next supply on SPY, 410, 409, next level there. Going into Qs, it's not necessarily as clear, but you have to say it's 293.5 all the way up to 296 roughly. That's your next supply level here, and that's what you're looking forward to. Not as much necessary upside for the Qs. I think SPY are in a breakout potential area. Now I'm going to go over some stocks I'm looking at and on the watch list, so stay with me. And I know that this may be some of y'all's favorite part of this, but we had some pretty good plays today. Tesla, it's turned out to be one of the most bearish stocks on the market. We have all the key levels highlighted here, but I want to highlight something really quick before we go too much further. Big bear flag on the 2-4 hour chart, breaking down what you have been. Now, when you go to a smaller time frame, like the 15-minute or even the 5-minute, I want to highlight you were in a downtrend for a better part of the day and kind of the past few days, right? Hit a fake breakout, and then we dumped towards a 181.5 level. Now, Tesla, I'm not a huge fan of this right here. I liked it. It got the 200 test, and then it dropped drastically. We saw it 200 test, that local supply there, and then we dumped and got rejected. Until we can start reclaiming back over 190, 192, it's just dangerous here, people, because you're just holding this downtrend, and there just isn't buyers stepping into the market right now, specifically here. Meta, we talked about this. I love the downside here. We had that big drop. We did not get we were very close. We're very, very close to getting a test of 109. But you did not. You got right above 109.8 and you bounced. That's where we're at now. End up closing that position. Pretty good. Still like it. But overall, we're still sitting in that downtrend. You can still see very clear here. You're trying to get the breakout as we speak. You could argue that you are getting it, but right there, you can see right there. I still have to anticipate downside. You break out of this, I am looking for upside. Again, we have not tested 122. Big level. If you break to this to the upside and markets start to flip back to the bullish, go above 395, I think Meta will test 122. But until then, you have to expect it to continue breaking down. Semiconductors, we saw some weakness here. We saw Warren make the big buy, and that could have possibly given us the last big push on semis. Again, semis have been probably the strongest sector in the market on this run to the upside, continually making these higher lows. Again, you can just quickly look here. I can bring these up and drag them up. You can still see we're still in this uptrend here. Very, very strong. You start to break below 150, it's pretty bad. But right now, you're even flipping below the 160 range. You even had a back test and you're flipping back down. This is concerning for me. If I'm looking here, you have a nasty daily gap all the way down to 142, I do believe. So that's where you're targeting here. If we start to flip back towards the downside, I will be looking at semiconductors specifically. Now, the semiconductor Warren Buffett bought was TSM. They're holding up great, and they're probably not going to drop too drastic. If they do start gap filling, I'm going to look at buying them just because of the momentum, and I believe Warren will probably start buying more and more of them. They're moving up too based on what's happening out of China with the peace talks, hypothetically, everything happening there. So I'll be looking at these. I'm looking at that. A lot of love here. TSM, I'll be looking to buy these dips going in here also. Now, last one I do want to mention is actually going to be Apple. Nothing too big here, and I'm not looking at too many trades. I'll have a live going on tomorrow so people can tune in. But Apple's interesting. Again, we talked about Apple on about the weekly and daily chart. The weekly gives you a good look here. You're bouncing once again at these lows here, right? Bounced at these lows, pushing back up. If you can break highs of around 158, I do believe you'll push the top of this trend, right? Towards 167, 168. So we're at a pivotal moment, and I believe you're setting up with your trades right now. You're going to have PCE, the Fed rate decision. Those will impact us and set the tone for the rest of the month of December, right? I don't believe we're going to have too much news, too much data being pulled, and you're going to have all the holiday moves coming in, the quote-unquote Santa rally, just like we had last year, right? Remember, last year on the market, if we look at SPY, I want everyone to remember what happened. Going into November, remember, this is November, this is the holiday season, this is Thanksgiving. Next week, we drop. Boom. We drop, and then we pump back up in December. January hits, and then we drop again. So that's what I want us to be prepared for the possible dip and then rip throughout December if news comes out good. Now, if we get a bearish viewpoint, we could be pretty rough, but I still don't think it's going to be a nasty downside throughout the holidays personally. So I'm definitely in favor of seeing more upside. So Apple is on the top of my watch list to test back of this trend, back in the long-term viewpoint. Again, this trend is beautiful. Another thing I want people to really realize right now, look at the market, people. Congratulations if you've been trading for the last year and you're up overall. Because guess what? You have survived a year-long, rough, almost bear market. They don't want to call it a recession. You can look at the Fed. They're not calling this a recession yet. I don't know what you call it. A year of downside? Don't know what to call it. It's been 11 months roughly. But that's what we need to take into account. Congratulations. I'll see you tomorrow. Biggest thing to watch for right now going into Friday, 395. Also know your volume deteriorating. Trash. Why? It's probably because all these people are going out and it's a holiday, people. The next week, week and a half, it's going to be low volume. Thanksgiving's next week. Have some fun. Get away from your computer. Go outside. Eat a turkey. I don't know. Do something. Go Black Friday shopping. Try to help the market, hopefully. But this is pretty evident. Big money, they've stepped away for a little bit. I'm just saying. I'd be surprised if we see 100 million day before the end of Thanksgiving week. Okay? See you tomorrow. Have a good one.